Trend following is a remarkably well suited strategy for Bitcoin because Bitcoin demonstrates all the underlying ingredients for that to be a successful endeavor. One, it's highly volatile, and it's volatile in a way where the distribution of unlikely events, the fat tails, are larger than most assets that look like a standard log normal distribution. The second thing is that Bitcoin tends to autocorrelate with momentum in itself. So when things go up, it goes up again and again, and it happens pretty quickly. Yeah, as you can see from the chart here, when Bitcoin runs up, it runs up hard. When it falls, it also falls pretty hard. You can know when that may happen to cut risk earlier. So the thing about Bitcoin, to put this all together, is that people have this misconception that to trade Bitcoin well is to buy low and sell high, like stocks. Buying low and selling high works for stocks because you can think of that through a fundamental valuation lens when something looks cheap or rich. But Bitcoin doesn't, I would say, literally have that way of framework. Instead, what Bitcoin is actually better suited for is you buy it high and you sell it higher.
Momentum.
Meaning,
it's a momentum investment.
It's a momentum investment because
or momentum swing, to be clear, right? Up until momentum diminishes.
Yeah, it's a trend strategy where you don't know exactly when the floor is, so you shouldn't really step into it, and you should buy it when you see signs of it ticking up that you think it'll continue. And that in itself can be very good if you want to accomplish a few things. The first would be participating in most of the upside. So you're not ever going to get all of the upside, but you're going to get most of it. And then more importantly, you get a better risk-adjusted outcome because you're not going to participate in the downside as much. So your overall Sharpe ratio of a trend strategy should be higher than a Bitcoin long-only strategy. The multiple of money might not be as high terminally from point A to point B, but if you're the kind of investor that cares about risk-adjusted return.
Right. Most should care about that. Most are not. They're chasing total return, which actually hurts their actual return.
Yeah, no, that's the key. If you're going to hold the thing forever and do it well and not give in, then I think it's okay. But as you've said, most investors struggle with this, whether it's because they themselves can't tolerate it, or maybe because of the agency risk involved and where the investment committee says, actually, I don't want this, cut it out, and you have no control over it. So most folks bottle this up. And so trend actually does work in crypto.